Your dream house isn't an investment, it's a liability wearing a disguise. Every month you pay that mortgage, you're funding the bank's retirement, not yours. The American dream was sold to you, and somebody else cashed the check. Here's what nobody tells you about homeownership in this country right now. You work 10 years to afford something that quietly drains your wealth every single day. And the worst part? You feel proud doing it. That's completely by design. You drain your entire savings just to get your foot in the door. Society tells you renting is throwing money away. That is a complete lie. The truth is, a 20% down payment on a $400K home is $80,000 gone. That's $80K pulled out of investments that could compound for the next 30 years. At 8% average market return, that $80K quietly becomes over $800,000 by retirement age. Keep renting strategically while investing your would-be down payment into the market instead. You think you own your home. The bank owns it. You just own the debt. A 30-year mortgage is specifically designed to maximize the bank's interest income, not yours. Here's what nobody tells you about a $400K loan sitting at 7% interest. You will pay over $558,000 in interest alone before you own a single thing. Your $400K house actually costs you close to $1 million total. Do that math. If you buy, make bi-weekly payments, and attack the principal aggressively from day one always, you pay off the house and think you're finally free. You are never free. Property tax bills arrive every single year, regardless of your income, your job, or your situation. The truth is, the average American pays between $3,000 and $10,000 per year in property taxes. Over 30 years, that's quietly $90,000 to $300,000, leaving your pocket with absolutely zero return. You can never truly own land in America. You are always renting it from the government. Factor in every carrying cost before you buy. Most people only ever calculate the mortgage payment. Something breaks every single year, and the repair bill never fits neatly into your budget. Nobody budgets for maintenance because real estate agents never bring it up before closing day. The 1% rule says budget 1% of your home's value every year just for repairs. On a $400K home, that's $4,000 every year just to keep it from falling apart. Over 30 years, that's $120,000 in maintenance sitting on top of everything else you already paid. If you're making this mistake, start a dedicated home repair fund right now before you buy. You have $200K in equity, but you cannot pay your electric bill this month. Think about that. Home equity is the most illiquid asset most middle-class Americans will ever hold in their lives. The truth is, you cannot eat equity. You cannot invest equity. It just sits there, locked up. To access it, you need a HELOC, a refinance, or to sell everything you built outright. Your net worth looks incredible on paper, while your actual cash flow quietly suffocates every month. Prioritize liquid assets and cash-flowing investments alongside or instead of building home equity at all costs. Every dollar tied up in your house is $1 not building real wealth anywhere else. We compare homeownership to renting, but we never compare it to smart, consistent investing instead. Here's what nobody tells you about S&P 500 returns versus home appreciation over 30 years. The stock market averages roughly 10% annually. Home appreciation averages only about 4%. That gap is massive. If you're making this mistake, you are literally choosing the slower wealth-building vehicle every single time. Run the real math on your specific market before deciding. Not every city makes buying financially smart. You bought more house than you needed because it felt like the right move emotionally. We attach our entire identity to our homes. A bigger house equals bigger success. That's the trap. The truth is, house-poor Americans have beautiful kitchens and completely empty investment accounts. That's the real picture. 63% of Americans live paycheck to paycheck. Many of them are homeowners. Let that sit. You sacrificed your financial freedom for granite countertops and a zip code that impresses other people. Buy what you need, not what impresses people. Your portfolio does not care about curb appeal. You're counting on selling your house to fund your entire retirement. That is dangerous thinking. Baby boomers got lucky with appreciation. That exact window does not look the same today at all. Here's what nobody tells you about housing markets heading into the next decade going forward. Affordability is broken. Rates are high. Demographic shifts are changing demand in major markets permanently now. If your retirement plan is one single illiquid asset, one bad market cycle ends everything fast. Build a diversified portfolio. Max your 401k. Invest in index funds. Never bet everything on one asset. Nobody here is telling you to never buy a house. That is not the point. The point is this: buy with your brain, not with your emotions or your ego. The truth is, the wealthiest people treat housing as one tool in the box, never the only one. You have every ability to build real, lasting, generational wealth starting right now in your life. But only if you stop letting cultural pressure make your biggest financial decisions for you going forward. Know your numbers. Know your true costs. Know the difference between an asset and a liability always. A house can absolutely be a smart move. A house can also be a 30-year mistake. The difference between those two outcomes is the strategy you bring to the table right now, today. If this video made you see money differently, hit the subscribe button right now. Every single week, we break down the money moves they never taught you in school. Stay sharp. You already took the first step by watching this. Now go make smarter decisions with your money.